Hey everybody, hope you're doing well. Today we're going to cover prep2grow's performance in June 1st, 2020 to March 31st, 2021. It's essentially since we started the prep2grow website and started to offer stock options, ETF recommendations. We will continue to do this on a monthly basis. So when April ends, we'll do the same type of review mid to late May of 2021 for June 1st, 2020 to April 30th or 31st, 2021. Since the beginning, it covers all of our trades. We'll go into a little more detail around this. If you want to see something as part of our performance, some detail or whatnot, just let us know. Happy to add it. All of our trades are posted on our website. We'll put it into the video so that you can see where to grab it. And again, any questions, let us know. But let's just jump into first things first. How do we make our recommendations? So prep2grow has a very large big data AI platform. It is enterprise strength. It's built by people that have done this numerous times at numerous different companies. We all have several patents in the space. And what we do, or where prep2grow started, was really predicting company performance and what companies could do about that performance. In essence, it's like a McKinsey in the box. So go in, consult with companies, let them know where their challenges are and try to correct them. We found that there was a huge correlation between performance and stock price. So thus led us down this path. We have very robust AI algorithms that do this. First things first is we collect data from collect millions of data points from all sources. We then bring that in, we analyze it, we enhance it, we create new metrics based upon our own algorithms so that we can have our own performance. And then we start to run it through the company performance algorithms, our own neural networks, to predict what the performance is, how does it impact the stock, and what's the sentiment around it. Once we find that a company is going to perform a certain way and has an impact in the stock, we start to assess what is the more fine-grained impact in terms of, is it going to have a more profound effect on the market? Are people going to dislike it and thus sell their stock? Or are people going to like it and buy the stock? And when do we think this performance is going to start to impact it? So is it 5 days? Is it 30 days? Is it 90 days? So when you look at our recommendations, there's a 5-day and 30-day. That's in essence when we're predicting that performance is going to impact the market. So once we figure all that out and it has enough impact and a soon enough timing, then it becomes an actionable recommendation for our subscribers. We then run it through a technical and sentiment analysis. Technical just meaning, what's the 200-day moving average? Are there any kind of technical barriers that it's going to have to get past? And what's the sentiment? We all know not all companies are treated equally. If Amazon has a missed quarter, it's going to have a profound impact. If some no name in a healthcare or a fin company misses a quarter and it has low volume and nobody really tracks them, it's going to have a very muted impact on their stock in the general market. Once we figure that out, then we start to assess who will receive those recommendations. So we do a lot of personalization. So it's do you want stocks? Do you want options? Do you want puts? Do you want calls? What have you looked at historically? How much do you want to spend on it? And what's your timing requirements and what your risk factors are? Those things go into giving you and providing you tailor-made recommendations. And then we assess the allocation of it. So not every subscriber is going to get the same recommendation, especially if they're puts or calls, just because the open interest in volume may not allow us to give you those recommendations. Because if we give it to all 6,500 subscribers, the reality is it's going to swamp an option and make it do very odd things. And so we don't do that. We want the stocks and the options to perform as expected based upon the company performance. We don't want to influence in any way, shape, or form. Also, that's completely illegal. So we definitely don't want to do that. And so that's why we allocate stocks so that it doesn't have any kind of profound impact on the put or the call. Stocks, it doesn't really matter. I mean, most of the ones we recommend have, anywhere from hundreds of thousands to millions of daily volume. The next thing we do is give it out to be recommended, we monitor, adjust, and alert it. Monitor meaning that if we make a recommendation one day and then for some reason another market turns and that recommendation is no longer a valid recommendation, we'll pull it. So you don't buy into a potential downward swing in the market. We'll give you something that is replaced with fits the current market conditions, right? So one day Tesla may be great, but the whole market is pulling back. And so we don't want to have you buy into a loss, right? We want you to buy into as it's moving up. So we do a lot of timing algorithms around that. What's coming out and is currently in beta is that once it's given to you, you can trade on your broker of choice, meaning if you have Ameritrade or E-Trade, you can go in and place the trade. We pre-populate all the data. The other thing is beta is that we're analyzing portfolios. So if you have a portfolio in Robinhood or E-Trade, we'll analyze it and let you know which stocks or options are really good and which ones are very good, and recommend any corrective actions. So that's in beta. That's something that's coming out very soon, and super excited about that. And then from there, we look at failures and wins, and we feed that back into our whole big data platform so that we know if a stock is performing one way or another. And if it's good, then the algorithm is doing good. But if the algorithm is missing on it, then pull out that stock or company and not recommend it. So the machine is constantly learning from every action and every interaction that's happening. So the strategy. So we have two strategies. So option strategy is when we give a recommendation, it means it has at least a 15% option gain. In all recommendations, it tells you how much is the total expected gain from that. Again, options are incredibly risky, hugely risky. It's all about timing, right? Especially short options. You can't buy into what may be like a 1% drop in the stock price for a call you just bought for an option that's going to expire in a week. You'll take a loss and never recover. So options are incredibly risky. We put everything we can into making sure that we give you the right options. So for folks that are not active traders, meaning that active traders see everything that we give them, we really filter them out for you. So if a company is announcing, within days, we're not going to recommend them because earnings also crazy risky, and we don't recommend options that are going to expire within 30 days. If you want all those things, you want to play earnings and you want to play short options, that's our active trader. But for folks that aren't into that kind of strategy, then the other options or the other subscriptions match that. It's very structured. It's trying to set up your best chance to success. You want to make sure that you don't lose money, and all of our algorithms giving those recommendations are set up and geared to make sure that we limit your risk and your exposure to a loss. But losses do happen. Options are risky. We also look at, will a performance event happen in 5 days or 30 days, and it has to have enough of a success rate to give it to you. So the algorithms mean that they're performing real well. So 90% or above, historical success rate for 5 days, prediction, or a 30-day with 95% or above. So very accurate recommendations. Stocks, on the other hand, less risky. They don't fight time decay, and they don't have as much timing events. A stock can drop 8% and bounce back up, and you can walk away at 15%. It happens. We've seen it happen. And they're obviously way more risk, way less risk, just because you're not fighting time decay and momentum and timing events. So our stocks are very accurate. The strategy is stocks to gain at least 5%, and it has to have a 30-day success rate of 85% or above. So just kind of put it into perspective, from June to March, we made almost 40,000 recommendations. Out of that, 1,000 fit a strategy. Out of that, 272 didn't have enough gain or didn't have enough allocation to give to our subscribers, so we're eliminated. Ones that sold at profit were 702, and the ones that sold loss was 28%, or excuse me, 28. So a 96% rate and a 3.8% loss rate. Now, there's going to be some serious caveats around that, and we'll get to that in a second. Again, we talked about this as our win-loss rate. We had 730 total recommendations that fit this strategy. 96% were a success. If you look at the gain loss, it was a $19,000 gain and a $2,000 loss. And we'll talk about this as well. Essentially, we looked at somebody that had a portfolio of at least $5,000 and what would they be able to gain with that $5,000. Everything we're talking about, it will be linked into the video, will be posted on our website. You'll see every single one of those 730 trades, how they performed, how somebody with a $5,000 portfolio can buy it, so on and so forth. So we provide all the backup data for this. Equity breakdown by performance. So call, put stocks. Stocks, I mean, 98% success. You can't really beat that. Very good at stocks. People that just do option trades, don't sleep on the stocks. I myself, trading just on our stocks itself, I'm up 45% for the year. When one sells, I buy a new one. Stocks are incredibly less risky. Calls, we're at 94%. It's pretty good. Puts, we haven't done well yet. And this is the caveat. Our puts were only 70% successful, or 7 out of our put recommendations turned to profit. 30% didn't. The breakdown was 72 or about 73% were stocks, 20% were calls, and about 9% or 8% were puts. So the caveat is, look, the market's been going gangbusters, not a lot of downturn, or the downturn has required incredible timing for puts. And prep2grow, their strategy is the algorithms buy 5 minutes after the market opens, no questions asked. We recommend every one of our subscribers to look at what is the predicted opening price, and what's the price change. We recommend our subscribers that if it's at a negative, don't buy. Just simply don't buy if pre-market is in red and shows a negative. If pre-market on the recommendation is green and shows a positive gain, the right timing, buy into the upward swing when the market opens. We prep2grow actually don't do that. The algorithms just buy 5 minutes after market opening. We're switching our timing algorithms to do that. I think the feedback from subscribers is, when we've tried that before, is that the feedback is we're gaming it. The reality is we're just trying to get the best price like you are, and so implementing that strategy to our buy is something that we're going to start to do down the road. But right now the feedback has just been negative when we start to do those kind of timing events. So we have a flat buy 5 minutes after market, no exceptions. You, again, recommend time it better. Again, pre-market, if it's red, don't buy. Pre-market, if it's green, buy on opening is our recommendation. So you have the ability to time it better than we did, or than our algorithms do, just because subscribers like a little more consistency. So if you had $5,000, what would you be able to perform? Average gain per month was 1.6K or $1,600. This is optimal, right? Like you saw, our success percentages are good. This is a machine that is buying it. No human can match a machine, right? So you got to take this with the caveat of a big data AI platform is doing algo trading, very structured, very methodical, working 24 hours a day, 307 days a week, 365 days with no breaks, right? Humans just aren't capable of matching that. So our success around this is significantly improved, right? This essentially becomes an all-day job for you. It's an all-day job for us to do this. We, as part of our offering, which we call Portfolio, we take this and give it in your hands so that the machine can work on your behalf and buy it. So Portfolio is coming out. So the expectation is that it's constantly working and doing the same things that it's doing for us, and you have that access to it, so these kind of gains become more achievable. Just because humans cannot compete against a machine like this, it's just not effective. So that's the huge caveat, right? This is a big data AI machine producing these results. And again, all auditable results we posted on the site. On average, gain about 12.5% per trade. That's stocks and options. And on average, takes 9 days to sell. So let's break that down a little bit in terms of, well, this is just a performance comparison against other companies that do this in the space. So against the S&P 500, I mean, it's an obscene amount. If you just look at stocks, that's a 32% gain from June till March 31st. The S&P 500 was at a 17% gain for the same period of time. We also look at robo advisors and the ones and how they perform. I mean, don't do a robo advisor. They're just, you just don't get any kind of return. If you want to invest in something safe and secure, just buy SPY or QQQ and end the day, right? But if you want a better return, prep2grow in terms of what we're doing with portfolio is the way to go. It is more advanced robo advisory for a portfolio. Options, we produce real well, 307% return over that period of time. Again, puts, it's just been not good for us. 70% accuracy is terrible. 94% accuracy in calls is great. The market, I mean, it happens, right? The algorithm is predicting company performance. The reality is the market may not care about company performance, right? If you look at Intel as a good example, huge trouble. We recommended puts on them all day long, or the algorithms recommend puts on them all day long. Most of those hit. A chunk of them didn't hit. I mean, Intel is in massive trouble in terms of doing a turnaround. Market didn't care, right? It jumped $15 over a 3-month period of time, which is about 20%. But then they had their earnings announcement and they dropped 6% overnight. So it's hard to beat sometimes that unpredictable sentiment in the market. And that's why options trading is highly risky and volatile. Just even if a company does good, it still may go bad, or a company does poorly, it still may go bad on a put or a call. So options, highly risky. Time to gain on average for stocks is 12 days. For options, it's 4 days. Sell at loss, 31 days. The best thing to think about is if you need to sell at a loss for an option. It's typically, if it hits 50% loss or it's greater than 30 days, typically options that are longer don't turn around. For shorter time frames, if an option expires within a week and it has 1 day, first day loss, it's game over, right? You should get out is our recommendation, and we sell alerts based upon that. You can see the breakdown by options and stocks. So most of our options sell, or 51% of our options sell within the first 5 days. And then it kind of has that long trail off for other ones. Stocks, a lot different. 50% or more happen 16 or 12 days out. But again, safer, consistent returns, not fighting time decay, and not as risky. And you're not losing everything. You're not losing 50%, right? So again, options less risky. So again, this is prep2grow's performance from June 1st, 2020 to March 31st, 2021. Again, this is our robo-advisor. This is our portfolio stuff that we're doing. It is hard for individuals to try to match a performance of a machine. It's just impossible. As somebody that has built this with the team, ourselves can't do it. That's why we're releasing portfolios in beta, so that the machine can do this and work for you on your behalf 24 hours, 7 days a week, 365 days a year, because it's better than us. So that's the caveat with this performance. It is an AI big data machine that's better than us. We're going to post the results. Again, we're going to post all of our results to the website. We are exceptionally proud of the results over the last 9-10 months. We're not proud of the put results. We'll get better at those, but the calls and the stocks, very proud of. If you have any questions or want to see any more detail, feel free to let us know at contact@prep2grow. If not, happy trading and hope you have a great week. Take care.